I used to think scalping was the fastest way to make money in crypto. Constantly entering trades, catching small price swings, it felt like I was in control of the market until I realized the only thing I was truly controlling was my own exhaustion. So I switched. I moved to day trading, but not the kind where you just buy and hope. I changed just one thing, something small, and within 2 weeks, my profits tripled. Not because of luck, not because of some magical indicator, just because I changed how I approached every trade. And in this video, I'm going to show you exactly what that change was and why it can completely transform the way you make money in the crypto market. I started just like most newcomers entering the crypto market, scalping. My screen was always split into 3 time frames, and my hands were constantly placing orders like I was playing some high-speed video game. A 2 to 3% gain, I'd take profits. A 1% loss, I'd cut. I thought I was being disciplined, but in reality, I was just panicking in a systematic way. Every day, I executed 20 to 30 trades, and every day came with some wins, some losses, some regrets, and some huge regrets. By the weekend, my portfolio looked like a spinning top. Sometimes green, sometimes red, soaring high one moment, wiped out the next. Then one evening, I sat down and reviewed my entire trade history, and I discovered something that stopped me in my tracks. 80% of my net profits came from just 3 trades, the ones I held for more than a few hours. Those trades weren't emotional. They weren't just lucky guesses either. They were the rare moments I actually analyzed carefully, waited for a solid entry, and let the market do the rest. That's when I realized it wasn't my strategy that was wrong, it was my speed. The only change I made wasn't learning more indicators. It wasn't using a bot. It wasn't buying VIP signals either. I simply changed my trading time frame from 1 minute, 5-minute charts to 1 hour, 4-hour, even daily charts. Sounds simple, right? But it completely transformed the way I made decisions. Before, I entered trades out of fear of missing out. Now I enter trades because the market structure tells me this is a high probability setup. Before, I cut losses because a red candle made me panic. Now I cut losses because my trading plan allowed for it from the start. Just by slowing down, I started seeing the bigger picture. And when I stopped guessing every tiny move, I finally started making bigger profits. 1 week after switching to higher time frames, I only took 3 trades. But my net profit tripled compared to the previous week with 40 trades. Same market, same capital, same timing. The only difference, I changed how I observed and how I waited. When I tell people I switched from scalping to day trading, the first thing they usually think is, probably because he made more money. But the truth is, money wasn't the main reason I changed. At first, I was making steady profits with scalping, around $300 a week. Small, but consistent. But after a few months, I started to realize I was mentally exhausted, even though my account was still in the green. Scalping, especially in the crypto market, feels like you're breathing in sync with every 1-minute candle. Every trade gave me a surge of adrenaline. But after 5 or 10 trades a day, I wasn't thinking clearly anymore. I doubted myself. I missed good entries because I was mentally drained. Or I jumped into bad ones just because of FOMO. Fatigue controls your emotions. There was one time I caught myself clenching my jaw unconsciously for 2 straight hours, just because I was holding ETH and BTC at the same time, and both pumped hard against my position. I didn't lose much, about $70, but what I really lost was my sense of control. When you're trading nonstop, your mind has no time to reset. You get sucked into a loop. Analyze, enter, exit, search for the next entry, as if you're a machine, not a trader with a plan. Scalping sharpened my reflexes, yes, but it made me lose the bigger picture. And I knew if I kept going this way, even if I made more money, I'd eventually blow up my account from one emotional slip. I needed a different environment to make better decisions. I started asking myself, if I didn't need to make money today, how would I trade differently? Am I trading to win or trading to escape the feeling of losing? Those questions changed everything. I reviewed all my most profitable trades over the past 3 months. Nearly 90% of them came from trades I held for several hours, where I had time to reassess and wasn't rushed by the clock. And then it hit me. Maybe I'm not a real scalper. Maybe I've just been trying to survive in an environment that doesn't match my nervous system. Scalping isn't bad, but it's not for everyone. I'm not saying scalping is wrong. I learned a lot from it. How to read price action quickly, how to make decisions under pressure, how to cut losses with discipline. But if a method keeps you constantly anxious, that's no longer trading, that's survival mode. And survival mode doesn't lead to sustainable profits. I once read a study from MIT, Massachusetts Institute of Technology, that said traders who make decisions under constant nervous system stress perform 37% worse than those in a neutral, focused state. So I decided to try something different. I gradually transitioned to day trading, not fully, but intentionally. I didn't quit scalping overnight. Instead, I limited myself to 1-2 high-quality trades per day, held for 1 to several hours based on setups I trusted. I started using the 15-minute and 1-hour charts more. I began to build a plan before each session, write down the reason for each trade, set clear targets, and avoid opening new trades within the same hour. At first, it felt like I was slowing down in a high-speed world, but strangely enough, my mind started to feel clearer. Instead of making $20 per scalp, I began locking in $100 from just 1 to 2 trades. But more importantly, I no longer felt drained from fighting to survive every day. The biggest shift wasn't in how I placed trades. It was in the belief I chose to hold. I don't need to win 10 trades a day to prove I'm skilled. I just need one good trade, aligned with my system, my emotions, and the timing. And that's when my profits started to grow, not just in dollars, but in control, focus, and sustainability. The hidden costs of scalping: time, energy, and mental drain. Let's talk about what I didn't see coming. When I first started scalping, I thought I was being smart. Quick entries, quick exits. $20 here, $50 there, and if I had a good day, maybe $100. But here's what no one told me. Scalping doesn't just cost you transaction fees. It costs you focus, emotions, and most dangerously, long-term clarity. The illusion of constant action. Scalping feels productive. You're glued to the screen. You're always doing something. It tricks your brain into thinking, I'm in control because I'm acting. But in reality, you're reacting. The market moves. You jump, you win some, you lose some, then you try to win it back, and suddenly you're in 23 trades, and you can't remember the setup of a single one. Scalping made me a screen addict. I'd stare at charts for 6, sometimes 8 hours a day, chasing the next move, but feeling more and more exhausted and less confident in my own process. Mental fatigue, the silent killer. Here's what I didn't realize until I stopped scalping. I wasn't just losing money on bad trades. I was losing mental capital. Mental capital is your brain's ability to make clear, focused decisions. Every trade costs it. Every doubt drains it. After 5-6 scalps, I'd feel drained, not just emotionally, but physically. And when I'd lose $100, I didn't stop. I got mad. I kept trading. I chased losses. That's not a strategy. That's survival mode. One week, I made $500 scalping. The next week, I gave back $700, not because my system was broken, but because my mind was. High frequency equals high friction. Let's talk logistics. Every scalping trade came with fees. Yes, even on crypto platforms that say low cost, slippage, especially in volatile pairs, decision fatigue, constantly reevaluating entries, exits, and worst of all, I couldn't scale it. Scalping doesn't work well when your size grows. Try placing a 5-figure position in a low liquidity altcoin. It won't exit as fast as you want. In short, scalping was fast money, slow growth. It felt like spinning a wheel 100 times a day. Sometimes I hit green, sometimes red. But the more I spun, the more I bled. Why I needed space to think. What changed everything was when I took a step back. I asked myself, am I building a system or am I just playing a game of dopamine? I realized I had no breathing room, no time to review trades, no time to plan. No system that told me, do this, then walk away. Scalping demanded constant presence. But ironically, it robbed me of the presence of mind needed to actually improve. So I started tracking not just my P&L, but my energy levels, emotional states, and focus score each day. The pattern was obvious. On days I scalped 10+ trades, I was mentally foggy and reactive. On days I traded 1-2 setups, I was calm, clear, and profitable. That's when I knew. It wasn't about doing more. It was about doing less, better. Scalping isn't wrong, but if you're not measuring the cost beyond dollars, you're missing the biggest leak in your trading system, your mind. In the next part, I'll show you the system that helped me trade less and earn more, and how one simple change flipped my entire trading psychology. The one change that changed everything. If I could go back and whisper one sentence into the ear of my past self, it would be this: slow it down and build a repeatable system. That's it. Not be smarter, not work harder, not study more patterns, just slow it down. This one mindset shift from reactive scalping to intentional day trading didn't just improve my profits, it completely rewired how I approach the markets, my mindset, and even my daily life. Let me walk you through exactly how I made the shift and how you can too. From scalper to structured trader. After hitting a wall with scalping, I took a week off. No charts, no trades, just reflection. I asked 3 questions that changed everything. What if I only took the clearest setups? What if I had strict criteria and walked away after execution? What if I measured success by execution, not P&L? This wasn't just about trading, it was about reclaiming clarity and control. Instead of 10 to 20 trades per day, I would now look for just 1 to 2 high probability trades per week. Sound crazy? It felt that way at first. But the results? Anything but crazy. Designing the new system. The change didn't happen overnight, but I broke it down into simple steps. Step 1, identify your market condition. Not all days are created equal. I stopped waking up and asking, what can I trade today? Instead, I started asking, is the market even worth trading today? This alone removed 3 to 4 bad trades a week. Step 2, define your setup. Like a sniper, I got rid of maybe trades. I only traded a setup I call the break retest confluence zone on the 1H and 4H timeframes. My criteria included clear trend direction, break of a key level with volume, retest with bullish, bearish confirmation, entry on clean candle structure, plus tight stop loss signs. No setup, no trade. That clarity removed doubt and saved me from forcing trades. Step 3, set alerts, walk away. Here's the genius part. I didn't sit there watching every 5-minute candle form. I set alerts on TradingView at confluence zones. When price hit the zone, I came back. If no setup was there, I left. This one habit freed up my day and protected my psychology. More time, better thinking. The unexpected bonus of slowing down was life. I started sleeping better. I wasn't checking charts during dinner. I had time to journal, review, and plan. Instead of reacting 50 times a day, I acted once, with confidence. I finally felt like a professional, not a gambler. And here's what shocked me. My win rate didn't just go up, it skyrocketed, because I wasn't taking 30 random trades a week anymore. I was taking 3 to 5 extremely clean setups with conviction. No more revenge trading, no more overtrading, just deliberate, high-quality execution. The math behind tripling my profits. Let's break this down clearly. As a scalper, 25 trades week. Average win, $20. Average loss, $30. Win rate, 45%. Net, $150 to plus $200 week with burnout. As a structured day trader, 3 to 5 trades week. Average win, $150. Average loss, $75. Win rate, draw 65%. Net plus $400 to $800 week with time freedom. Same account, same market, different approach. And suddenly, I wasn't surviving, I was scaling. What really changed? Let me be clear, the strategy mattered, but the mindset mattered more. I stopped trying to be right 20 times a day and started being disciplined once or twice a week. I let the market come to me, I trusted my system, and I gave myself the space to execute without noise. Key takeaway, you don't need more trades to win, you need fewer, better ones, backed by a system you actually trust. In the next part, I'll show you what my current trading routine looks like, from wake up to wind down, and how I structure my week around clarity, not chaos. Weekly rhythm. When not trading is your real edge. There was a time I believed that if I was a full-time trader, then I had to be in the market every day, doing something, placing trades. Because if I wasn't trading, wasn't that just being lazy? But the market taught me a costly lesson. Clicks made out of pressure to do something instead of real preparation almost always led to losses. I realized most of the money I lost didn't come from a broken strategy, but from trading on days when I should have stayed out. I started observing my trading weeks more closely, and I noticed something interesting. My most profitable weeks often had just 1 or 2 trades, but 4 to 5 days of preparation, observation, and mental alignment. On the flip side, weeks when I stayed busy placing trades every day were the ones where my account declined and my energy was depleted. That's when I made a decision. I needed a weekly rhythm, not just to manage trades, but to manage myself, a backbone for my psychology, discipline, and energy. I call it weekly rhythm, the natural flow of a trader who's been around long enough to stay sane. Monday, observation day. No setup, no trade. This is the day I simply observe. I review last week's journal, take notes on market structure shifts, new support resistance levels, and potential catalysts, news, events, etc. I don't trade unless there's a rare A-plus setup. I used to force trades on Monday just because I felt itchy after the weekend. The result? Sloppy entries, bad timing, falling into traps before the market showed clear direction. Now I get it. Monday is for stepping back, breathing, and letting the market wind up, not for getting sucked in. Tuesday, execution day, primary entry day. By Tuesday, the market has usually revealed more structure. This is the day I focus sharply. Short-term trends are clearer, volume picks up, and I've got a full view of the landscape. If a quality opportunity arises, I execute with confidence, not with urgency. I revisit my checklist, ask, does this meet all criteria? Is my psychology stable? Am I trading the setup or reacting to FOMO? Tuesday is often my most profitable day because I allow myself to wait and only pull the trigger when ready. Wednesday, secondary window, manage or wait. If I'm already in a trade from Tuesday, Wednesday is for management. Move stop loss, take partials, watch reactions at key zones. If I'm flat and something new is forming, I may enter, but I don't force anything. I don't trade just to hit a quota. If it's unclear, I stay out. Sometimes Wednesday is just a day for coffee, journaling, or a mental reset. Patience is sometimes the most powerful strategy. Thursday, flexible flow, trade or rest. I call Thursday my wild card. If the week's been quiet, it might be the last opportunity to strike. But if I've already had a good run or the market's choppy, I step back. Many traders get pulled by the feeling of not enough. If they haven't made money all week, they go all in on Thursday trying to catch up. But I've learned, Thursday isn't for chasing, it's for asking, am I still in peak mental condition to trade well? If not, I'd rather do nothing than enter with a cluttered mind. Friday, closing the books. No trades after 12 p.m., review and reset. I may observe the market Friday morning, but after 12 p.m., I never take new trades. Even if I see a beautiful setup, I log it, save it for next week. Why? Because Friday afternoons are often erratic, volume drops, and most traders are mentally tired. At that point, rest and review matter more than returns. I spend the afternoon doing a full review. Analyze every trade. What went well? What needs work? How was my mental state during each decision? I write not just as a trader, but as a serious coach to myself. Why? Weekly structure matters so much because mental fatigue is the invisible enemy no one talks about. You don't need to blow up to feel exhausted. Just trade every day with high expectations, then miss, then doubt yourself, and watch your edge erode. But with a set rhythm, you start building stable energy, clarity, and intentional decision-making. I once had a week where I only took one single trade, but because I prepared well, stayed composed, and followed my system, I won. And it became one of my best weeks ever. Not trading isn't failure. It's the highest form of discipline. You don't need to be a trader who's active every day. You just need to be the one who's still focused after 100 days of watching, waiting, and striking at the right moment. Open quote, your edge isn't in trading more, it's in trading better. And sometimes that means doing nothing. Close quote, the market will always give you a reason to click, but what you really need is a reason to wait. And sometimes your biggest profit doesn't come from what you do, but from having the patience to do nothing at all. My real system, from chaos to consistency. For years, I was what you'd call a chart junkie. I stared at price charts the way some people binge watch Netflix all day, every day, convincing myself I was studying the market. But deep down, I knew the truth. I wasn't studying, I was chasing, I was reacting, overtrading, getting lucky, getting wrecked, winning one day, losing double the next. And the worst part, I had no real system, no spine to lean on, just instinct, hype, FOMO, and way too many YouTube indicators that never aligned. The turning point wasn't one big aha moment. It was a slow death. A death by 1,000 paper cuts, missed trades, sleepless nights, regretful, over-leveraged decisions. Until one day, I snapped. I said, either I build something that works or I quit. What you're about to see is not some holy grail. It's a system I built for myself after blowing up more small accounts than I care to admit. It's simple, it's structured, and most importantly, it's repeatable. 1. I trade only 2 setups. No more. You don't need 20 strategies. You need 1 or 2 that you master, like a sniper masters a rifle. My entire system revolves around 2 high-probability setups. Break and retest of market structure, BRS. I wait for clean support resistance zones to break, then retest with clear rejection. It's boring. It works. Liquidity sweep reversals, LSR, when price hunts stops below a swing low or above a swing high, then quickly reverses on strong volume. I strike. These setups aren't magical. What makes them powerful is how well defined they are. I have a checklist for each. No checklist, no trade. If even one condition is missing, I skip it. No exceptions. They're backtested over hundreds of screenshots and live sessions. I know their average win rate, max drawdown, and psychological traps. Most traders fail not because their strategy is bad, but because they trade everything and master nothing. 2. My risk engine is ruthless. Here's a truth most traders avoid. Your system doesn't need more trades. It needs better risk discipline. Before every trade, I define the risk, R, and make sure it fits within weekly loss limits. I never risk more than 1.5% of my total capital on any single trade. My stop loss is placed at the point of invalidation, not what I can afford to lose. If I hit my weekly risk cap, typically 3R, I stop trading until next week. I track every trade in terms of R multiple, not just dollars. Funny thing, when I started risking less, my equity curve grew faster. Why? Because I stopped blowing chunks of capital on mess setups or revenge trades. 3. I trade in time blocks. Not all day when I was scalping, I felt like a prisoner to the screen, chasing every candle, reacting to every move, drained by 3 p.m. That's not trading, that's burnout. So I adopted a 3-block system. Morning prep, 7:30 to 8 a.m., mark zones, review overnight moves, write my bias. No trades, just prep. Execution window, 8 to 11 a.m. Fully alert, focused, disciplined. If no setup shows up, I walk. No forcing. Review and journal, 4 to 4:30 p.m. Screenshot trades, log R multiples, note emotions, grade setups. Weekly, I choose one area to improve. Outside those hours, I'm done. No screen hopping, no Discord, no just one more scalp. The less I stare, the more I win. 4. I use automation to protect my brain. I used to waste 2 hours a day setting alerts, recalculating risk, staring at charts. Now, I set TradingView alerts only at confluence zones. My risk calculator lives in Notion. Plug in SL and TP, get lot size instantly. I use checklist templates per setup. Duplicate and fill before each trade. This system reduced my cognitive load by half. More importantly, it killed hesitation. When the setup is valid, I click. That's it. 5. My psychology checklist. Before every session, trading is 80% mindset. So before I even look at a chart, I ask, did I sleep at least 7 hours? Have I reviewed today's plan? Am I emotionally stable? No stress, anger, anxiety? Am I trading to follow my plan or just to make money? If I check no to any, I don't trade. That last question, it's everything. If I'm trying to recover losses or prove something, I'm already compromised. No trade is better than a stupid trade. I don't chase dopamine, I chase discipline. 6. My weekly structure, the invisible edge. Most retail traders blow up by trading every day. Me, I trade like an assassin, patient, quiet, precise. My week, Monday, observation only. Machat, no trades unless A++ setups appear. Tuesday, primary entry day. Structure is clear, liquidity balanced. Wednesday, secondary entry or scale-in opportunity. Thursday, trade if something clean shows up. Else, rest. Friday, no trades after 12 p.m. Full review and journaling. Why this structure? Because trading is mental warfare, and forcing trades daily burns your edge. Some of my best weeks came from one trade and 5 days of calm prep. What my system isn't. Let's be clear, this isn't a magic formula. It won't save you from every drawdown, it won't give you instant dopamine hits, but it does 3 things better than any system I've used. Filters out noise, protects capital, grows confidence with every execution. That's the goal, not perfection, consistency. The result, since adopting this system, win rate jumped from 43% 61%. AVG, R per trade improved from 0.6R 1.7R, only one red week in the last 9 months. Screen time cut by 60%. Mental energy skyrocketed. I no longer chase price, I let price come to me. I don't fear missing out, I fear breaking my rules. That shift changed everything. What's next? In part 8, I'll show you how I built this system from zero, without a mentor, without signal groups, and without expensive indicators. Just screen time, brutal mistakes, and one relentless journal. If I can do it, so can you. Let's go. The psychological trap of more trades equals more money. Let me be honest with you. When I first shifted to scalping, I thought I had found the answer. Fast execution, tight stops, quick profits. That's what scalping is supposed to be, right? But somewhere along the way, I fell into the oldest trap in the book. Open quote, if I trade more, I'll make more. Close quote. It sounds logical, it sounds ambitious, but it's one of the most dangerous mindsets in trading, especially in scalping. The loop that destroys consistency. At first, it feels rational. More trades, more chances to profit, faster feedbacks, faster improvement, more data, more edge, right? But here's what actually happened to me. I started forcing non-A+ setups. I chased trades just to stay active. I confused movement with progress. I burned out. When I reviewed my journal that week, I found something painful. Open quote, the only 2 profitable trades were on Monday and Wednesday, the only trades that followed my system 100%. All the rest, impulse, overconfidence, dopamine-driven decisions. Close quote. Why scalping isn't about more, it's about sharper. There's this illusion that scalping equals trading every tick, that real scalpers fire off 20 trades an hour glued to the screen. That's nonsense. The best scalpers I've met aren't hyperactive, they're hyper-selective. They let price come to them, they strike with precision, then walk away. They're not addicted to action, they're addicted to execution. Open quote, scalping isn't about doing more, it's about doing less, but sharper. Close quote. The dopamine factor and how it hijacks your system. Let's talk brain chemistry. Each win, even a tiny one, releases dopamine. It feels good, rewarding, addictive, and that's the problem, because you start chasing the feeling, not the setup. You start trading to feel in control, to feel on, to feel right, and suddenly you're making decisions based on impulse, revenge, FOMO, fatigue. Open quote, your system is no longer in control. Your nervous system is. Close quote, and that's when things fall apart. How I broke the loop and cut my trades by 60%. The turning point, I started tracking the number of trades per day and the emotional intensity during each. Within a week, I noticed that the best days had left 3 trades, the worst days had 10+ random ones. The more I tried to make the day count, the more I lost control. So I made one rule, open quote, the 1 trade rule. I allow myself 1 trade per session unless the market absolutely screams, close quote. Guess what happened? Weekly profits didn't drop. They rose because I was only taking my best trades. I went from 30 to 40 trades /week down to 10 to 12. Net profit tripled because I stopped leaking capital and I stopped burning mental energy on garbage. Stillness is a scalper's edge. Here's what no one tells you. Open quote, in scalping, speed isn't your edge. Stillness is. Close quote. Stillness lets you wait through chop, focus on clean zones, avoid almost setups, let trades mature without pressure. I started treating each session like a sniper op. 1 bullet, 1 moment. Total focus. If it wasn't there, I didn't shoot. No forcing, no guilt, just presence. That stillness, it changed who I was as a trader. Checklist, how to avoid the more equals more trap. Here's what I now follow daily. Max 1 trade per session unless A++ shows. Pre-market, review only high-quality zones. Mid-session, tag emotions after each decision. Post-trade, was this system or emotion? Weekly, count unnecessary trades, not just wins, losses. Open quote, I stopped measuring by profit. I started tracking my discipline ratio, close quote, and that changed everything. Final lesson, open quote, you don't need more trades, you need fewer, cleaner, deeper ones. Close quote. Scalping isn't a lottery machine. It's a precision tool, and your mind is the mechanic. Protect your capital, protect your system, protect your focus, because real profit in trading doesn't come from doing more. Open quote. It comes from doing exactly what's needed and nothing more. Close quote. Trading in silence. Why quiet traders win loud results. There's something strange about the world of trading that not everyone realizes right away. The traders who create the loudest results are often the quietest ones. Not because they have nothing to show, but because they've moved past the phase of needing to prove anything to anyone else. Now, the only person they need to prove something to is themselves. In this part, I want to share one of the most underrated but crucial pillars of consistent profitability: silence in mindset and execution. From noise to stillness, the journey of a mature trader. When I first started, I was the typical noisy trader, posting every win on forums, panicking after every loss, jumping from system to system, addicted to FOMO, swayed by FUD, and stuck in herd psychology. Every day felt like a race, not for profit, but for emotion. Now, I sit quietly, I wait for my setup. I don't predict the market, I don't force trades, I don't enter out of boredom, and I never feel the need to prove I'm right. That state of stillness, no rush, no flex, no tension, has elevated my trading performance to a whole new level. Stillness is a strategic skill, not a personality trait. Many believe calmness is just a personality trait. It's not. It's a learned skill, paid for in blood, sweat, and blown accounts. I used to panic when price moved against me. I used to whisper, "It'll turn around," even when the trade was clearly wrong. I held on to losing positions until the account imploded. All of these were symptoms of an untrained, unstable mind. But once I built a disciplined, logical, rules-based system, I learned to trust my process more than my emotions. I didn't need to outsmart the market. I just needed to follow the plan. No faster, no slower. Stillness, passivity. My silence isn't apathy. It's active control. It's knowing when not to trade. It's waiting until the odds are in my favor. It's shooting only when I'm sure. I spend time reviewing charts, backtesting setups, logging journals, observing my own behavior. I step back to see better. Open quote, "In a world full of noise, the quiet ones see the clearest," close quote. Mental warfare stillness, the sharpest weapon in chaos. When markets get wild, most traders panic, overreact, and lose. But those who've trained for stillness, they know. Volatility reveals opportunity. Only for those patient enough, stillness helps me avoid chasing red or green candles, ignore fake breakouts, stay out of uncertain trades, remain calm through losses, and most importantly, not break my system over a bad day. I trade like I'm walking through a foggy forest, one step at a time, checking the ground, breathing steady, no rush. Opportunity isn't for the loud, it's for the disciplined. You'll see them on social media. The loud ones, flashing P&Ls, preaching strategies, seeking attention, but most won't last, because the more they show off, the more pressure they carry. And pressure breaks the undisciplined. Me, I keep it simple. No one knows how much I make each week, except me and my journal. No one pressures me to trade today. No one even knows if I traded at all. And that silence, that's where my unshakable strength lives. Practicing stillness. 3 daily principles. 1, don't trade when you're angry, anxious, or trying to make it back. If you're not calm, the market will exploit you. 2, spend at least 10 minutes each morning tuning your mind. I usually meditate or write down 3 feelings before the session starts. 3, keep your trading environment clean and silent. No news, no social media, no texting. When I trade, I only trade. Open quote. When you see a trader who stays silent, who doesn't brag, panic, or preach, that might just be the most profitable person in the room. Close quote. I no longer need to prove anything. I just keep showing up. Keep following the system. Keep honoring the silence, because silence is the loudest echo of real success. Scaling up without burning out, the art of sustainable growth. Imagine this. You're winning consistently. $300, then $500. 1 week, you hit $1,200. And you start thinking, what if I double my position size? What if I trade all day? What if I quit my job? Stop. This is where most traders self-destruct. Not because their system is broken, but because they scale too fast, too soon. Scaling, increasing capital or trade size, is a double-edged sword. At the right time, it multiplies your profits. At the wrong time, it breaks your psychology and sends you right back to square one. Let me share how I avoided getting caught in the spiral of reckless growth. 1. Identify the right time to scale. A solid system isn't one that just won 3 days in a row. It's one that survives. Bull and bear market conditions, days when you're stressed, weeks with major news releases. I only started scaling after backtesting and forward testing my system for at least 3 months, showing consistent profitability in 80% of weeks, knowing my max drawdown, e.g. 94R in 1 week, trading small sizes with solid emotional control. If you're not confident, risking 1% per trade, scaling to 2% is a disaster waiting to happen. 2. Scale in steps, not in doubles. My biggest mistake was jumping from 1R to 2R risk per day. The result? One losing trade didn't just hurt my P&L, it wrecked my psychology. I revenge traded. My system collapsed. Lesson learned, scale gradually, 1%, 1.2%, 1.5%, 2%. Like lifting weights, you don't jump from 20 kilograms to 50 kilograms just because you feel strong today. Your nervous system needs to adapt, so do your emotions. Hasher 3, redesign your schedule. Optimize like a business. When profits grew, I didn't trade more. I actually traded less. I hired freelancers to automate tasks like summarizing trade data, pre-filtering signals every morning, logging journal entries via voice-to-text. I stopped being a 12-hour-a-day trading employee. I became the CEO of my trading business. Want to scale your system? Start by scaling your time and mental capacity. Hatter 4, build a champion's psychology. As your profits grow, so do your expectations. When I made $100 a day, I was happy. But once I got used to $300 per day, even a break-even day felt like failure. A $200 a day, it felt like a meltdown. So I rewrote my beliefs. Small profit plus system alignment equals victory. Loss plus plan adherence equals hidden growth. I trained myself to stay emotionally flat. No highs from wins, no lows from losses. I call this the 0 point, the neutral state that protects me from both ego and panic. Shayat 5, reward yourself the right way. Here's the paradox. Once you start making consistent money, you might feel empty. You thought $1,000 a day would make you happy, but now you're staring at the screen, back hurting, feeling isolated. So I built a reward system. 10 profitable weeks, 3-day vacation, no laptop. First $5,000 month, buy a meaningful personal gift. 100-hour milestone, invest in a mentor, not a new iPhone. That way, I kept the positive energy without taking reckless risks. Hasher 6, some months you scale, some months you shrink. Some months, the market's great, clean setups, readable sentiment. That's when I scale up. Other months, it's choppy, noisy, flooded with news. I reduce size and take fewer trades. Scaling isn't a straight line, it's a wave. The difference between traders who survive and those who blow up, they know when to step back. 7, set performance goals, not dollar goals. I used to set goals like, this month, I must make $2,000. Now I say, this month, I'll keep a 60% win rate, 1.8R average return, and never break my system. Money is a result, not a goal. Great traders don't chase money, they chase performance. And Hasher 8, know the difference between growth and greed. Scaling with a plan equals growth. Scaling with emotion equals greed. Can you tell the difference? If your thought is, my friend made $10 this month, I can't fall behind, that's envy-based scaling. If your thought is, the market is in high probability conditions and I've prepared well, that's strategy-based scaling. Same action, different mindset, completely different results. 9, summary, how to scale like a pro. Start only when both system and psychology are solid. Increase risk in small steps, no more than 25% at a time. Let your body and emotions adapt. Measure performance, not dollars. Reward and rest strategically. Know when to reduce size. Focus long-term, not on getting rich fast, but getting rich sustainably. If you're at the scaling stage, remember, open quote, no one becomes a millionaire trader in 1 week, but many blow up in one night by scaling too soon. Close quote. You don't need to be fast, you need to be right. From discipline to identity, becoming the trader who doesn't break their rules. There's a quiet transformation that happens. No applause, no celebration, no announcement. But when it happens, it changes everything. It's the moment you no longer have to try to follow your rules, because now you are the kind of trader who doesn't break them. Let's talk about that shift, the shift into identity. Discipline is a muscle. Identity is a skeleton. At the beginning, discipline is your crutch. You force yourself, you resist urges, you count how many good days you've had. But discipline gets tired. Discipline can break. Identity is different. Identity is structure. It's the skeleton that holds your system together. When your trading behavior becomes part of who you are, you don't need willpower anymore. You're no longer trying not to revenge trade. You simply say, that's not what I do. Hash a small shift that changes everything. Let me give you an example. Scenario 1, you see a setup that doesn't fit your plan. You hesitate. A voice whispers just this once, and you reply, I shouldn't. I'm trying to stay disciplined. Scenario 2. Same setup, same voice, but your reply is, I don't take those trades. That's not who I am. Feel the difference? The first response is negotiation. The second shuts the door before it opens. Repeated behavior becomes identity. So how do you become the trader who never breaks their rules? You don't just decide it, you build it, action by action. Every time you stick to your plan, you cast a vote for the trader you're becoming. Every honest journal entry reinforces your integrity. Every time you walk away instead of chasing losses, you reinforce that identity. It's not about being perfect, it's about consistent alignment. A journal that builds identity. Here's a journaling prompt I've used for years. Today, did I act like the trader I want to become? One question, every day. What you'll notice is powerful. On the days you answer yes, you sleep better. You respect yourself more. On the days you answer no, it stings, but that sting becomes fuel. Over time, your journal becomes a mirror, not of profits, but of progress. Identity is your shield in crisis. Discipline can crack under emotional pressure. Identity doesn't. Imagine this. You've just taken a big loss. Emotions flare, you feel the urge to get it back, but something deeper kicks in. Not fear, not hesitation, conviction. Open quote, I don't chase, I follow process, close quote. That doesn't come from willpower, it comes from identity. When chaos hits, identity is your anchor. Heck, the missing piece. Most traders never install. Many traders have systems, some build discipline, very few ever complete the identity loop. That's why they relapse. They say, open quote, I was doing great, and then I blew up. Close quote. That blow up didn't come from lack of knowledge. It came from a fragile identity. Because under pressure, we fall back to our strongest default. If your default is emotional gambler, you'll go back there. If your default is professional risk manager, you'll fall into process, not panic. Becoming that trader, even if you're not yet. You don't need perfection to earn this identity. You just need to show up and cast your vote daily. Even if you broke your rules yesterday, even if you blew your account last month, you can still say, open quote, I'm becoming the kind of trader who respects their edge, close quote. Then act in alignment with that belief. Not once, not twice, every day. Identity brings freedom. Here's the paradox. At first, rules feel restrictive, but trading from identity brings freedom. Why? Because you're no longer battling yourself. No more second guessing, no more jumping between systems. You're locked in because it's who you are. That kind of peace can't be bought. It must be earned. Most traders chase systems. Some chase signals. A few chase psychology. But the ones who last, they chase identity. They ask the deeper question, what kind of trader am I becoming? And then act accordingly, even when no one's watching. That's how you stop being someone who tries to be disciplined and become the trader who simply is. Rules, routines, and rhythms, turning trading into a repeatable machine. Every successful trader has rules, but most traders don't follow them. And if you're like I used to be, you probably think your problem is discipline. It's not. The real problem is design. Because when your rules are vague, your routines are loose, and your rhythms are non-existent, discipline becomes impossible. Let's fix that. The discipline myth. When I started trading, I thought rules were for beginners. I saw pros talk about adapting, trusting their gut, flowing with the market. So I copied that. I journaled my feelings, meditated before entries, told myself I was listening to price action. But really, I was just guessing. It felt engaging, but it was gambling in disguise. It wasn't until I set hard rules that my results stabilized. Not suggestions, not good habits, rules. And the first thing I learned, open quote, rules aren't there to tell you when to trade, they exist to tell you when not to, close quote. The 3-layer discipline framework, a structure I built over years of trial, error, and refinement. Layer 1, foundational rules, the red lines. These are the non-negotiables. If I break one, I stop trading for the day. No emotion, no debate, no exception. My red lines, no trades before 9:30 a.m. NY or after 12 p.m. on Friday. No trading without a written plan, plus screenshot. Max 2 trades day, win or lose. If I lose 2 days in a row, I take 24 hours off. No charts, no Discord, no news. These rules are not about optimization. They're about survival. Just like you wouldn't drive 100 miles per hour through a school zone, I don't break these lines, no matter how good a setup looks. And when traders ask, but what if there's a perfect setup? Here's the truth, open quote, perfect setups don't exist, but broken discipline does, close quote. Layer 2, tactical routines, the daily drivers. With red lines in place, I added daily rituals to shape my mindset and actions. Not glamorous, just repeatable. My routine, 7:30 a.m., wake up, stretch, hydrate, quick walk. 8 a.m., review key levels, news, yesterday's trades. 8:30 a.m., pre-market journal, how do I feel? 9 a.m., build watch list, plan 2 to 3 setups, screenshot entries, exits. 9:30 to 11:30 a.m., execution window, no music, no multitasking, full focus. 11:45 a.m., walk away, win or lose, log 3 notes. 12:30 p.m., done. These routines turned chaos into rhythm. Not only did my results improve, my energy did. No more burnout, no more fighting the market, just process. Layer 3, weekly rhythms, the bigger frame. Daily structure helps you act. Weekly rhythm helps you align. Most traders treat each day like a new game, but you're not trading a day, you're trading a process, and that process lives inside the week. My rhythm, Monday, observation only, no trades unless A+ setup appears. Macro prep. Tuesday, primary execution day, volume in, market stable, full risk trades. Wednesday, continuations or reversal entries, lighter risk. Thursday, selective. If I've hit targets, I rest. If not, clean setups only. Friday, no trades after 12 p.m. Review, journal, plan weekend study. Not magic, just nervous system alignment. When I know what each day is for, I stop chasing. I act with precision. And most weeks, I only need 1 to 2 good trades. Why this works. Psychology of pattern. The human brain craves predictable patterns. Rules, routines, and rhythms reduce decision fatigue, prevent emotional spirals, and build identity reinforcement. You don't just act like a trader, you become one. Open quote. You don't need more trades. You need a process that makes your decisions boring, so your results can be brilliant. Close quote. Hash, the anti-hero mistake. Customizing too soon. Most traders hear systems like this and say, that won't work for me. I need flexibility. Here's the truth. Open quote, you earn the right to adapt. In the beginning, structure is freedom. Flexibility is just noise. Close quote. Follow your system for 90 days with 90% consistency, then tweak it, not before. Part 7 isn't flashy. No hacks, no indicators, just a blueprint to turn you from a trader into an operator of a trading system. In the next part, we'll dive into open quote part 8, feedback loops and trading reviews, how I review every trade not with guilt, but with curiosity, because feedback, not results, is what keeps your system alive. Close quote. Risk, reward, and real discipline, where most traders break. Most traders treat risk management like a checkbox, something to acknowledge in books but ignore in real trades. But in my experience, risk isn't about math, it's about identity. When I transitioned from scalping to structured day trading, I thought I understood risk. I could calculate my 1% per trade. I used stop losses, trailing exits, R multiples, all of it. But I missed one critical truth. Open quote, knowing your risk rules doesn't mean you follow them under stress. Close quote. What changed everything was one brutally honest question. Do I actually respect my plan more than I fear missing out? That question hit deep. Because the truth was, no, I didn't. I craved the win more than I trusted the process. I wanted money more than mastery. That's when I realized, discipline isn't about rules. It's about who you become when rules are tested. Why most traders think they're disciplined but aren't. Let me paint a familiar picture. You've taken 3 losing trades in a row. You followed the plan, but the market chopped sideways. Now the next setup appears. It's not quite valid, but maybe this one will bounce. So you take it. It fails. Now you're down 4R, frustrated, doubting everything. Open quote, the issue isn't your strategy. It's not even psychology. It's conditional discipline. Discipline that only exists when things go your way. Close quote. That's not discipline. That's convenience. My 3 non-negotiables for discipline under pressure. 1. Predefined max daily loss and stopping for real. My rule, if I hit 9 at 2R, I stop trading for the day. Even if a perfect setup appears minutes later, I don't touch it. Why? Because after a loss, perception warps. You justify weak setups, you bend rules. Revenge trades don't just cost money, open quote, they destroy self-trust. Close quote. 2. Only trade when setup plus environment align. I don't just look for chart patterns, I need context behind them. Example, a breakout during dead volume hours, I skip it. That same setup during a high volatility reversal window, I'm in. Open quote. This one filter eliminated 70% of my bad trades. Close quote. Traders don't lose from bad systems. They lose from applying good setups in bad environments. Hunter 3. One risk level. No exceptions based on emotion. I risk 1% per trade. I never upsize when I feel sure. Open quote. Sure isn't a setup, it's a feeling, and feelings aren't scalable. Close quote. Discipline means detaching size from emotion, always. The hidden discipline, managing winners. Ironically, managing winners was harder than taking losses. A trade would shoot plus 2R in minutes, and suddenly I'd freeze. Should I take profits now? What if it reverses? But what if it runs to 5R? So I created rules. At plus 1.5R, move stop to break even. At plus 2R, scale 50%, let remainder trail with structure. Close final 25% on reversal candle or end of session. Why so mechanical? Because without structure, you fall into the illusion of control. You think you can feel your way to the best exit. Open quote. You can't, not consistently. Close quote. Tash risk-reward ratios. The psychological trap, traders love the idea. Just take 3R trades and win 33%. You'll be rich. Here's the truth. Open quote. You won't hit 3R cleanly most of the time unless your system is tuned for volatility and timing. Close quote. When I forced every trade into a 3R mold, I gave back open profits, got frustrated, started forcing trades to make it back, and down the spiral I went. Eventually I learned, open quote, the best trades give more than 3R when you stop forcing 3R. Close quote. Now I let the market decide. If structure shifts early, exit at 1.8R. If price keeps flowing, ride it to 4R, 5R, more from. This flexibility within structure changed the game. It built self-trust. Discipline equals identity. Here's the bottom line. Open quote, you don't need a new system. You need to become the trader who honors the system you already have. Close quote. You can copy plans, you can borrow strategies, but if you won't follow through when no one's watching, none of it matters. One line I read changed how I view trading. Open quote, you're not trading the market, you're trading your relationship with discomfort. Close quote. And risk is just the language of discomfort. Your rules are the compass. Your discipline is the engine. Your identity is the driver. So ask yourself, open quote, would you rather look smart for a moment or be consistent for a decade? Close quote. Because when you choose consistency over brilliance, when you measure success by how well you protect the system, not chase the market, open quote, that's when the game changes, close quote. Why simplicity scales, the compound effect of discipline. Let me tell you something I wish someone had drilled into me when I first started. Open quote. Your biggest wins in day trading won't come from complexity. They'll come from simplicity, repeated with ruthless consistency. Close quote. I've seen traders obsess over Fibonacci spirals, harmonic bat patterns, and 20-tab chart setups, only to blow their account because they forgot to check one thing, their own state of mind. You don't scale results by adding noise. You scale by removing friction. The hidden power of simple rules. Here's a real example. One of my best weeks trading BTC USDT was completely boring. I didn't enter a single trade until Wednesday. The setup, a clean support resistance break with volume confirmation. No MACD, no RI, just price, volume, and a simple time filter. Open quote, trade only between 9 a.m. to 11 a.m. UTC. Close quote. That one trade netted me $1,300. Had I forced trades on Monday or Tuesday out of boredom, I would have chopped myself into emotional exhaustion. But the system was simple and, more importantly, enforced with discipline. Open quote, the setup didn't scale me. The discipline did. Close quote. Hash. The multiplication loop. Here's the beauty of simplicity. When your system is simple, it's easy to repeat. When it's repeatable, it's easier to refine. And once it's refined, it compounds. Small edges, like 1% better entries or 5% tighter stops, start stacking over time. For me, this became consistent, boring, beautiful growth. Week 1, plus $1,100. Week 2, plus $350. Week 3, $1,200. Week 4, plus $420. No drama, no all-nighters, just clean execution. Open quote, the key wasn't brilliance, it was subtraction. Close quote. Cheshk, your brain can only handle so much neurologically. Your working memory is limited. Overloading it with indicators, news, alerts, and hype, that's how you create decision fatigue. And fatigue equals shortcuts. Shortcuts equal FOMO. FOMO equals losses. Simple systems reduce mental load. They give your brain space to think clearly, especially in volatile markets like crypto, where one candle can erase hours of planning. Simplify to scale. Let's be honest, most traders don't fail because they lack tools. They fail because they can't use them consistently. Your edge isn't in how many confluences you spot. It's in how reliably you execute under pressure. That's why I built a one-page checklist that changed everything. One clean chart per pair, one time of day to trade, I chose mornings UTC, one entry method, break and retest. One exit rule, take 70% at 1.5R, trail the rest. One review session per week, open quote, not to limit creativity, but to protect decision energy for what matters most, close quote. Simplicity reveals the truth. When I removed the clutter I started seeing, my emotional triggers, my bias traps, my tendency to overtrade after wins. My journal became a mirror, not just a tracker. Every line reflected either a moment of discipline or a lapse into impulse, and over time, those small moments stacked. They didn't just improve my trades, they transformed my identity. Scaling isn't just about size, it's about stability. Here's a common trap. A trader finds a working setup, then they double size too fast. Result, their psychology breaks the system. But with a simple setup, you scale based on confidence, not emotion. Open quote, not more money, more size, but more data equals more conviction. Close quote. That's how I scaled from $50 a day to 250 plus. Not with hacks, not with leverage, but with clarity. Complexity feels safe, but it's not point. Let me end with this, open quote. Complexity is a comfort blanket for insecurity. Close quote. It gives the illusion of control, but often hides the real problem. You don't trust your process. If you did, you wouldn't need 12 confirmations. You'd need one clear reason, executed with total alignment. Simplicity scales, simplicity reveals, and simplicity, done with discipline, compounds into mastery. The 3-hour workday trading blueprint, how I structure my day for clarity, energy, and high conviction execution. If you're still staring at charts for 10 hours a day, let me say this clearly. Open quote. That's not discipline, that's desperation. Close quote. The truth? My most consistent months came not when I worked longer, but when I worked sharper. 3 hours a day, that's it. But every minute had a job. Every hour had a mission. Let me show you exactly how. After hour 1, the ritual. Reset before you touch the market. Before charts, Twitter, or BTC dominance, you reset you. 10 minutes breathing plus visualization. Visualize one high conviction trade. Not a win, just the process. Patience, focus, calm execution. 10 minutes journaling. Answer, how do I feel today? What mental trap am I avoiding? What would the pro version of me do? 5 minutes cold splash movement. Not biohacking, breaking autopilot. System checklist review. Say it aloud, own it, ritualize it. Open quote, state is everything. And this hour protects it, close quote. Hour 2, the hunt. Analyze, wait, and strike once. This is the core hour, execution. But execution doesn't always mean action. Sometimes it means restraint. My process, open only 1 to 3 focus pairs, usually BTC, ETH, or one hot alt. Mark key levels, set alerts, close charts, let the market come to you. Keep charts clean. 2 to 3 levels max. 1 trade max rule. If setup aligns, I take it. If not, I walk. Open quote, no hovering. Hovering creates fear. Fear kills edge. Close quote. Hour 3, the review. Learn while emotions are fresh. Most traders skip this part. That's why most don't grow. Even if I don't trade, I still review. Log trade or no trade decision. Was it aligned with my system? Did I avoid temptation? That's a win. Emotion tags, fear, boredom, urgency. Mental rehearsal, what should I have done? Spot patterns of success and repeat, open quote. This hour builds self-awareness, and that's how pros separate from amateurs, close quote. Why 3 hours work and 10 hours don't. 10-hour days equals overanalysis, emotional fatigue, revenge trading, impulsive decisions. 3-hour days equals pre-trade clarity, in-trade control, post-trade growth, open quote. In crypto, where one candle can flip your plan, control is your edge, close quote. Hash my daily blueprint visual, you can see the code in our conversation history. The invisible power of repetition. At first, this 3-hour structure felt boring. But in trading, boring is beautiful. Because boring means your system is predictable, your emotions are stable, Your results become scalable. After 30 days of this rhythm, I was making more. I was burning out less. I walked away from the desk proud, not drained. Open quote, that pride is worth more than any green candle. Close quote. Final truth, you don't need more time, you need more precision. Open quote, consistency doesn't come from complexity. It comes from controlled simplicity executed with emotional precision. Close quote. The 3-hour day isn't for lazy traders. It's for lethal ones, those who know what they want and how to prepare for it. So, 3 hours, one system, no noise. Let discipline do the rest. What now? You've just walked through a blueprint built from years of real experience, from noise and burnout to a system synced with your nervous system. But remember this, open quote, watching this won't change your life. Doing something will. Close quote. Here's what to do next. Subscribe if you haven't, not for vanity, but because every video builds on this journey. Comment below what hit hardest, what felt like it was written for you. Share this with a trading partner stuck in chaos. It might save them years. Download the free checklist from this video, a printable weekly execution sheet, link in description. Ready to go deeper? There's a full step-by-step course if you want to build your own system from scratch. Closing belief, open quote, the best traders aren't trying to conquer the market, they're mastering themselves in the presence of chaos. Close quote, this isn't just trading, it's identity, it's integrity, it's who you are when no one's watching. You've seen me do it. Now it's your turn. Let's get to work. See you in the next video.